Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Randy Martinson of Martinson Ag. Well, we're seeing mixed trade in grains and the hog futures this morning. Cattle sharply higher, which we'll talk about in a moment. All right, Randy, I want to talk about soybeans first of all in the grain complex. We're seeing just a little bit of an uptick in that market. Some of it's tied to a story that Bloomberg put out that China is going to fulfill their 12 million metric ton commitment. But how realistic is that?
Every day that passes that we don't see some, confirmation of a export sale or shipment, it's one day closer to not fulfilling that. And right now, the trade is kind of thinking that, maybe that this isn't going to quite all happen. It might be a little bit lower than the 12 million that they talked about in October. But at this point, it looks like it's going to be pretty hard to complete that task at this point.
We have estimated 3 million metric tons that has been bought by China of the 12 million metric tons. That leaves 9 left. That's what, over 2 million metric tons we have to have as far as sales every week through the end of the year?
Exactly. And, shipments need to get up, because they were talking about having most of these shipped by the end of January. So even that number, it looks like it needs to be pretty high. And you got to remember, you got 2 weeks that are kind of out with the week of Christmas and the week of New Year. So yeah, time is starting to tighten up on the ability to be able to sell and ship that grain.
Although it's possible that they could buy that by the end of the year, just not ship it, right?
It's very possible. I mean, it gets a little tougher to start getting shipments going once you get into that February timeframe, because that's when South America, Brazil, kind of takes the lead and ships a lot of soybeans into China at that point for the sales that they've made. But we did notice, one thing is that, the kind of the area that is somewhat thinking that it can still happen is the fact that right now China's only got about 30% of their February needs for soybeans bought or committed to. So that opens it up. It gives us an opportunity there, but things still have to start moving here pretty quick.
Well, and the other but is we've not seen China on either the backlogged export sales reports or the export inspections reports, right?
Exactly. And the export inspections are current, that they've been going through the shutdown through the whole time. So they are current. And, supposedly we had, 3-4 boats that were being loaded in the Gulf and some out of the Pacific Northwest last week, but they did not show up on the export inspections or the shipments numbers that were released yesterday. So it's a concern that our time frame is getting tight.
And no flash sales after the 10 to 15 boats that were supposed to be rumored to be sold last week to China, right?
Right. Yeah, we got, I think, the 10 to 15 rumored. We got confirmation of 10 of them, I believe it was. We don't have confirmation of anything else. And it's been since Friday since we've seen any flash sales announced. So I would think that if we don't see one tomorrow for China for soybeans, the trade is going to get awful nervous.
Meanwhile, China has actually banned some product from Brazil, right?
They have. They did. They actually rejected some loads that did come in partially because it was contaminated with one that in particular was contaminated with wheat. So they rejected that load. And I think they have now suspended the shipping of about 5 shippers coming into China. So that also opens the door that gives us a little bit of hope that we could see something transpire before too long.
And interestingly enough, Brazil's price is still below ours. So economically, it's not feasible for China to buy our beans, right?
Correct. And they still have a little bit higher tariff against ours. Ours is still at 13%, where theirs is at 3%. So that adds to it as well. But a lot of the U.S. beans going to China are still going into the reserves, which are exempt from the tariffs.
We have not seen the agreement or the framework signed by the U.S. and China. When do you think we will see that? That's what this market needs, right?
Most definitely. I mean, we need the confirmation, and right now, so far, China has not, backed up anything that the administration has said as far as this deal that is supposedly that transpired in October. So, yeah, we would like to see that. They gave them, they were supposed to happen right around Thanksgiving. That didn't happen. Now they're saying in the next week or two, we should have the deal and more news come out. But I think the rare earth metal side of it is holding things up, and I think that could blow this deal up.
Okay, we'll be watching for that. That's going to be important to see if they can come to some sort of agreement there. Meanwhile, let's talk about South American weather. We've seen a couple of downgrades of the Brazilian, both corn and soybean crop this week. What's going on there?
Yeah, we have. I mean, it seems like everybody's now tightening up their projections a little bit, mainly because the planting didn't go quite perfectly. There was some concerns, and crop didn't get put in a timely or in a perfect manner. So, and then now we're also looking at warmer, drier conditions. They missed some rains, and they're talking about the 6 to 10 showing warm, dry conditions coming in, especially in the center south of Brazil. So that's caused some to, kind of hedge their bet and start lowering some of their production estimates.
So, Randy, for soybeans to go back up and retest the November highs, do you have to have all 12 million metric tons sold to China? Is that alone enough? Or do you have to also have a problem with weather in South America?
Well, I think if we started to see some demand come in from, China, and we get confirmation of a trade deal, I think that would be enough to push us back up there. I think the icing on the cake would be a little more production problem in South America. But I do think that if we can get confirmation of the trade deal, that will be enough to push the market.
Corn market, talk about that one because we've had record exports. The inspections have proved that out, but yet that market can't get over these resistance areas, right?
No, it can't. It seems like the market is pretty much baked in the idea that we're going to see record corn demand, especially on the export side. And that is kind of unfortunate because right now, what are we, 76% ahead of last year's pace? I mean, we're just shattering records as far as corn exports are concerned. And it should be enough to help support the corn. But I think everybody's focus right now is on beans and the China deal, that they're not really looking at what's going on in corn.
So is there anything that can get corn above? I think the 200-day has just stopped this cold in the March contract. Is there anything that can get us above that? If exports aren't going to do it, is it lower yield? What is it?
I think the lower yield would do it. And I still think USDA has to come in and lower yield for both corn and soybeans, as we go forward. I don't know if they'll do it in the December report or if they'll wait to January, but I do think, and we do have a record corn crop out there, but I don't think it's a 186 record. I've said this before, I think it's closer to 182. And I think USDA, if they started lowering the yield and tighten up the stocks a little bit, that would certainly help with the strong demand.
And corn is lower this morning. We hit resistance, but the wheat market's lower. That's not helping.
It's not helping. And wheat seems to be kind of the drag of the commodities right now. Even though, we've got good exports, we're at 9-year highs for our export market. That's what we've been waiting to see happen, is an improvement in that. But when you got production estimates increasing for just about every single one of the major exporting countries for wheat, it's tough to get wheat to rally a lot. And also the talk of a possible truce or ceasefire with Ukraine and Russia is adding a little bit of pressure, because if we do have a peace deal, that means the sanctions will be lifted against Russia.
I think that's gotten lost on a lot of people, but we've retraced a good portion of the rally that we had there during the October-November timeframe, right?
In wheat, we have, and we're also looking at, Europe's wheat. The MAFI is also seeing new contract lows, so that's not helping. And they're looking at higher production, so I can see where that is seeing a little bit of pressure come into their market.
Yeah, we're making new lows for the move here this morning as we speak. Okay, the cattle market. We had a nice recovery last week, a higher weekly close. Yesterday, did we just see profit taking? And today, if that's the case, what's pushing this market here today? Because we're back above some key moving averages.
That's a market that just doesn't seem to know which direction it wants to go on a daily basis. I mean, yeah, yesterday's pressure was a little surprising to me, especially, I figured we'd see 3 days of up and then see some pressure come into the market. But, we had good gains on Friday. We did on Wednesday. And then to see the hit come on Monday was a little bit surprising. I think a lot of it is just being tied to the noise that's coming from the administration on how they want to try to control the price of beef, and the fact that now it looks like the Secretary of Ag is going to come with some program to counter the price of ground beef. So I think there's enough noise out there that's causing this market to be somewhat erratic. But you look at the fundamentals, supplies still are tight. We got winter storms moving across the region, which is slowing performance. And I think that's what's helped warming the market.
Gotcha. Well, the stock market was down yesterday. That might have been part of it, the risk off that hurt the market. And so conversely, we're back up here today. But higher cash trade would certainly help this market get some confidence back, wouldn't it?
Oh, most definitely. I mean, that really, in that we're kind of been focusing on cash this whole major, the whole bull run is cash led the market up. And if we started to see cash act a little bit better, that certainly would help bring the market back up again as well.
Okay. So the hog market had a higher weekly close last week as well. Do you think that market is trying to bottom, or is it just so hinged to the cattle market that that's the main thing that it's trading, or what?
I think that's one of the things that's focusing, but I think now the new focus will be on Spain and the African swine fever that they've come with. They're a big exporter of pork, and I think this could open up and get some exports for the U.S., and I think that might come in and help bring some stability into the market.
Yeah, I see yesterday China and Mexico both banned exports from Spain. So maybe that is an opportunity for us to pick up a little bit of that business.
We can only hope, and we do export quite a bit to Mexico now, coming back into China. We used to export a lot to China. So if we can get that market back, that certainly would help it.
Yeah, that market could use some demand news for sure. All right, Randy Martinson with Martinson Ag. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right.
When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win, win. Talk with your retailer or visit Brevant.com/win to get started.